Did you know there's three ways to make money investing in an ETF or mutual fund versus only one way to make money in a savings account, which is just dividends and a very low interest rate at that? With an ETF or a mutual fund, you have three different avenues of potentially gaining money. The first is growth, which most of you know. If you buy a stock at $10 a share and it goes up to $15 a share, that is the value going up, and that's its growth. But there's also dividend payouts and capital gain payouts, typically paid out through the quarter or at the end of the year in December. Dividends is simply a distribution by the corporation, and capital gains is any actual shares sold off having realized gains. You can learn more about that in Investopedia. Now, when I talk about growth in the stocks, I'm not talking about growth stocks. There's value stocks, growth stocks, or value or growth mutual funds and ETFs. That's a different thing you can look up later. I'm talking about getting dividends. So how you can make profits by getting dividends in your investments by holding on to your investment. So you can, again, look up dividends in the Investopedia and you'll find that under realized gains, how that works for capital gains, and then the difference between capital gains and dividends incomes. You can look all that up for more definition in Investopedia. I'm just going to try and put it up in layman's terms. So here's an investment I have with the American funds, and I just did a video about selling and talking about its dividends, and I've got some dividends on the American funds on December 14th. So just to let you know here, this particular fund is worth about $108,000 at its current date, as January. I've invested $50,000 in this. I started back in June 2021, and by the end of December, that was its value. And I've gotten capital gains and dividends of about $18,000 in the last 2 years. So in 2 years' time, 3 years' time, 2021 and mid 2021, and then held it through 2022 and 2023, and still holding 2024. So during that time, I got 18,500 from that around. If you subtract out the dividends I've got from the investment I've made, I really only have $31,000 in this particular investment. So if it's just simpler for you, at the end of the year, you get shares by holding on to this mutual fund, typically paid out towards the end of the year. So therefore, when you're making your investments, it's careful to not just look at the holdings and look at the annual rate of return, because it may not be reflecting dividends in these rates of return. It's just reflecting the value. So the interest might not be going up as much. I'm averaging about $6,000 a year of dividends in this particular fund. Vanguard may or may not be paying as much. So I don't really know dollar-wise which one is ahead. I just know that this one is a tech fund. It's going to have bigger drops when the market goes down. It's going to have bigger rises when the market goes up. And because I'm an active trader, this one is a better suited investment for me. But it doesn't mean that funds that are not showing a higher rate of return are actually doing anything for you or not doing anything for you. You could be making a lot of dividends and not getting a lot of interest to show for it. So again, it's good to be diversified, and hope this helps you what you might want to start looking into when you're making your investments. Again, my 3 keys to getting growth on my mutual funds or my ETFs is the growth of the stock itself and dividend and capital gains.